Welcome back to the Chris Shannon podcast. I'm Chris, obviously. Today, there's been a lot of questions about 2023 and what that housing market's going to look like. Is there going to be a crash? Are we going to recover from the last few months? What's going to happen? So what we're seeing right now is we just had interest rates drop about 0.5%, which has picked up a little bit of steam with new buyers, mortgage interest, refinances, all that kind of stuff. We've talked before about the last few recessions and what that means as it comes to housing prices. So we've had, including 2020, we've had 6 recessions in our history. One in 1980. These are the last 6 recessions I'm talking about, not all told. So 1980, 1981, 1991, 2001, 2008, and 2020. Only twice in those 6 times have prices actually gone down in value. The biggest one everybody knows of, 2008, prices went down 19.7%. The other time it went down less than 2%. Prices on average appreciate 2 to 3% year over year. So in 80 they went up 6.1%. In 81 they went up 3.5%. In 01 they went up 6.6%, and in 2020 they went up 6%. So take that 2 to 3% average of appreciation, and even through 2026 right now, every article I'm seeing is still forecasting at least a 3.2% appreciation for housing. Now, as it pertains to 2023 and what we're going to see, with these interest rates getting to 7-8%, we still don't have enough inventory. Here in Columbus, and I can only speak to Columbus on all of this because that's where I work. We're only about 3,000 houses, single-family houses, on the market. That is in line with the last few years, and what that's going to do is that's going to start going down as we get through the holidays. We're going to probably get into the high 2,000s. I don't expect it to go up, which is going to bring, January is always a slow month, February is a slow month, but it starts to pick up. So if we look at this, and in February, we're going to probably be in that low to mid to high 2,000 range of houses on the market. That's going to create a market similar to what we've seen the last few years. The big thing is projections are saying that interest rates should come down as inflation comes down. If somehow these interest rates get down to the low 5s, the high 4s, that's going to change a lot of things. I don't think we're going to see a crash anytime soon. That's just me personal. Nationally, we're way behind on new built homes. Here in Columbus, we're tracking very, very low. 7,000 houses, not accounting for population growth, which 72 people per day are moving to Columbus was the last article I read. That may be lower, that may be higher now. What I'm basically trying to tell you is, if we forecast this, I look at everything every single month, and I track it year over year over year. We're heading into a similar type of inventory market that we've had the last few years. Now, I don't think we'll be back down to 1,100 houses for inventory next year, but if we're in that low 2, under $3,000 or 3,000 houses, that's going to create, I'm going to call it a buying frenzy. I don't think we're going to see the 25, 30 offers that we saw last year, but what this does, if we get into that low 5s, high 4, that allows the people that might need to move up in house, that are in like an under 3% or a 3.5%, it makes it a lot easier. So we're locked in at 2,875 on our property. We looked at moving, and then the interest rates went up, and it just stopped us, because it doesn't make sense to lose your 2,875 and go to like a 7.5. I can understand going 2,875 to like a 4.5 if I need to move. So I don't see that we're going to have a housing recession here in Columbus. On the coast, possibly. It's just a different type of market. But here in Columbus, with where the inventory level is, and if these interest rates do drop, it could be a different thing. What I will tell you, and I'm going to go into this more depth here in the next few days with one of my lenders, is I think there's a buy box. Today is December 5th. I think from December 5th to the end of January, maybe middle of February, there's a real nice buy box, as interest rates are still a little bit higher, but they're dropping, where you can get a better deal. I think we probably have, what I say, mid-February from now. What is that, about 75 days? What we're seeing right now is offers are still, if the property is priced correctly, they're still close or at listing price, but sellers are having to give more and more concessions. It can be seller paid closing costs, it can be repairs on request to remedies, all kinds of different things. So basically from now until end of January, mid-February, if you're looking to buy, I think it's a great time to buy. It's still a great time to sell because there's not enough inventory like we've talked about already. But once that mid-February, end of February, beginning of March, once we get back into that selling season when everybody's starting to think about buying their new house to get their kids in their new school district, all that kind of stuff, I can see it heating back up. Especially the key will be here with how hot the real estate market will be is where will these interest rates be? If you see these interest rates get into those low fives, those high fours, again, I don't think we're going to go back to the 25 to 30 offers on a house, but we may see 5, 6 offers. I don't think you'll see those crazy appraisal gaps, but you may see over list price, things like that. So it really is going to hinge a lot on these interest rates. But everything we're seeing, all the indicators point to there's not going to be a recession in housing. Now, a recession in the economy is completely different than a recession in housing. There's just no indicators in the housing market right now, based off of what I'm reading, what I'm seeing, that we should see prices drop dramatically. Like I said, one of the last articles I read projected appreciation of over 3% until the year 2026. So a lot can change in the next few months. Like we know that in May, interest rates went from 3% to 5.5% in about 3 weeks. So things can change very quickly. This is December 5th. This is what we're seeing right now. I wouldn't be worried about buying a house right now if that's what people are worried about. I don't think the bottom's going to drop out. 2008 happened because of predatory practices. You could go into a lender, you could tell them you make $1 million even if you made $10 a year, and they'd give you a loan so you could afford $1 million house. There's a lot of predatory practices. The reason that is not happening anymore is there's so many overlays, there's so much documentation, there's just so much more happening. The government has got involved, which in some aspects is good, other aspects is bad, but you're not just having stated income loans. So I don't see 2008 happening anytime soon. So long story short, 2023 outlook for housing prices, housing appreciation, in my view, looks pretty good because of inventory levels and the potential that interest rates will be dropping. Like I said, we'll go into this more in depth with one of my lenders here this week. But for now, go ahead, like, share, and comment. Let me know if you have any questions. I'll see you next time.